Welcome back to another episode. Today we're going to take a closer look at the e-commerce giant Shopify stock, ticker SHOP. Unfortunately, we can see in the past year the stock is down roughly 76%. Year to date, the stock is down roughly 72.8%. On the bright side, there was some great news released on November 29th of 2022 that Shopify merchants set new Black Friday Cyber Monday record with $7.5 billion in sales. That is a 19% increase in sales from $6.3 billion during last year's Black Friday and Cyber Monday weekend. And it kind of just shows the overall strength that there still is in the consumer market. But on today's episode, what I want to do is take a closer look at some reasons to be bearish in this stock. I personally am a shareholder of Shopify and I am bullish in this company, but I do believe it's always important to understand the other side of the investment process, right? So kind of understand the bearish side. So let's take a closer look in today's episode.
I do want to thank The Motley Fool for sponsoring this video, and make sure to check out fool.com/Jose to get the top 10 stocks to buy right now.
All right, so starting off, the first thing I want to mention is just the overall growth in employees this company saw in 2021 that really caused a lot of expenses to grow dramatically. I think this is a huge kind of red flag at the moment, or yellow flag, that a lot of bears are seeing in their kind of thesis. For example, if we take a closer look in the past 3 years, how Shopify's stock-based compensation has grown dramatically over the past few quarters. We can see this overall trend, especially in the past quarter alone. The other thing is this is kind of we're also seeing kind of cash flow from operations dwindling in the trailing 12 months. We can see in the trailing 12 months, Shopify's cash flow from operations is down dramatically. We did see a huge growth in Shopify's employee on an annual basis. We can see 2022 was up dramatically. Company has kind of taken a nice amount of steps here. We know in July 26th of 2022, Shopify mentioned that they are laying off roughly 10% of their employees during that time frame. And I know in the past few quarters, in the past few months, that's probably has increased a nice amount. But obviously, this is a bigger company than it was before. So even if they are laying off employees, they still have to kind of pay severance paychecks and kind of other liabilities that happen with the laying off of employees here in the States and globally as well. And overall, again, we're seeing kind of still the highness in stock-based compensation. I don't expect that to change anytime soon, but in the upcoming quarters, as employees numbers start to dwindle and kind of these severance paychecks have been given out throughout the time frame that they are given, I would expect stock-based compensation to some extent to stop growing, hopefully, or kind of stay more in the flat line or very minimal growth on a kind of quarterly basis. So this is probably my first red flag right now. Again, the company has made some kind of changes to fight that. Now, take a closer look at the second red flag for Shopify, some of the reasons to maybe stay away from the stock. Again, like I mentioned, I am a shareholder. I'm super bullish in this company, but I always think it's important to understand the other side. So if you are enjoying the episode, make sure to hit the thumbs up, as it does help me grow my overall audience. If you want to support a little bit more, make sure to subscribe using my link at fool.com/Jose. Finally, if you want to learn about the semiconductor market, that is my bread and butter. I have a weekly podcast on a different channel. The link is above. Episode 4 was just released. Episode 5 was just recorded. So make sure to subscribe. The link should be here. So make sure to click that out. I want to say the second red flag I want to say is the overall acquisitions and kind of big moves this company is doing to kind of grow their solutions. So there's both a good and the bad, right? If you're trying to grow your solutions, what happens? You're most likely either investing in some form of engineering team or investing in some team to kind of grow that solution, or you're making acquisitions. One of the kind of solutions they're really trying to grow is the kind of fulfillment network. And most recently, they did acquire a company called Deliver, and the acquisition finished off on July 8th of 2022. During the earnings call, right, I want to say the fulfillment market is probably a low margin market, and it's one that has that needs heavily invested. And we can see during their most recent earnings, they kind of mentioned for the outlook, because of the larger mix of their merchant solutions contributing to overall revenue and the dilutive impact of Deliver, gross profit dollar growth will meaningfully trail revenue growth. We also see here in their presentation, they do mention that overall this kind of acquisition of the liver is causing some form of dilutive to gross margins. So this is a very, very kind of expensive acquisition, and this kind of market or solution that they're trying to enter, the fulfillment network, is going to be an expensive one for them. So a lot of investors are wondering if this is the right move for Shopify. I personally do believe it's smart for them to kind of continue to be more of the full solution for the e-commerce world, and obviously that includes the kind of distribution side. So I personally enjoy it, but I can definitely see why certain investors might not like it. Overall, we can see the company is trying to kind of reduce a lot of their expenses. We can see for the full year outlook, they did mention that stock-based compensation was going to be $575 million. Their previous outlook was $750 million. So they are seeing a decrease in there. Capital expenditures, $125 million. Previous outlook was $200 million. So we can see the company is attempting to kind of pull back on those expenses, and we're definitely seeing that with just the guidance alone. The final outlook I do want to mention for Shopify that I have, or the final red flag, it's just the overall company's balance sheet. It's still very strong in my opinion, with roughly $4.9 billion in cash and roughly $1 billion in total long-term debt. But I do want to say it's kind of dwindling, especially look at that cash and short-term investment from a quarter ago. It was roughly $7 billion, a little bit lower than that, if anything. But just in the past quarter, it has dropped down to roughly $5 billion. Again, it wouldn't be too much of a red flag if we were in a normal market environment. But remember, we are seeing things like consumer spending maybe decreasing. On the fortunate side, right, with this kind of Black Friday and Cyber Monday record, it kind of shows otherwise, but we're definitely kind of expecting some form of consumer pressure on the spending. The other thing is the overall kind of macroeconomics we're seeing from higher interest rates, from the overall foreign exchange rates as well, that this kind of decreasement in the balance sheet can continue. So again, if this was more of a normal environment, I wouldn't think too much of this, but because of all the headwinds that are impacting Shopify and the overall macroeconomics, I do believe that the cash and short-term investments could kind of continue to decrease over time. So this is something investors should keep an eye out. So let me know, what are some of the reasons you might be bearish for Shopify that I might have missed? Again, like I mentioned, I am bullish in this company. I personally believe it has the opportunity to provide great returns in the overall e-commerce market. And maybe my next video might actually be 3 reasons why to buy Shopify. Let me know if that's a video you guys want to see on the comments below. Take care, have a good day, and see you next time.